once the derivatives break, I mean, you could see many commodities that double, triple, quadruple in price literally overnight, simply because the financial cushion, if you will, of the derivatives suppressing the price is gone, and then it's discovered that the supply doesn't exist. So I mean, it will all end up in a failure to deliver in many different commodities.
In times of crisis, some people turn to gold and silver as safe haven investments. These precious metals have a long history as value stores and exchange mediums. They have traditionally maintained value over time, even during economic downturns. According to Bill Holter, a former Wall Street manager, a financial issue could trigger a failure to deliver, or conversely, a failure to deliver could contribute to a financial problem. Holter indicates that commodity prices might suddenly skyrocket if the financial derivatives suppressing their prices lose effectiveness. This situation could reveal supply shortages. Holter anticipates that multiple commodities might face a failure to deliver, leading to a complex interaction between financial issues and commodity markets. Gold prices hovered near one-month lows on Thursday as investors braced for make-or-break U.S. inflation data that would shape the Federal Reserve's upcoming interest rate decisions. Meanwhile, Andy Schectman, the CEO of Miles Franklin Precious Metals, believes that the failure to deliver precious metals indicates a potential bail-in scenario. This suggests that banks may need physical assets to back up their claims. If a bank cannot deliver the precious metals it has promised to its customers, it may be forced to bail in those customers to raise the necessary funds. This could lead to widespread panic and a rush toward gold and silver to escape the financial system. Schectman predicted combining military, industrial, and monetary demands would result in overwhelming demand for physical silver, potentially leading to a squeeze on commodities exchanges like COMEX and LBMA. This squeeze could prompt a rush for available precious metals before their scarcity becomes more pronounced. We will now bring you clips from Andy Schectman's and Bill Holter's interviews with Arcadia Economics. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Well, it'll probably all happen at the same time. One will trigger the other, whether it's a financial problem triggering a failure to deliver, or is it a failure to deliver that causes the financial problem? It's hard to say. But as we talked about before, you can't print gold, you can't print silver, you can't print oil, wheat, etc. And once the financial derivatives lose sway, and again, whether it be as a supply and demand or for whatever reason, once the derivatives break, I mean, you could see many commodities that double, triple, quadruple in price literally overnight. But the question is, the chicken or the egg question: is it the failure to deliver that causes the financial problems, or is it the financial problems that cause the failure to deliver? It really doesn't matter.
I would think it's the financial problems that cause the failure to deliver. The realization, again, pointing to a bail-in. If we see a bank bail in, you're going to see mass hysteria where people who never would have thought about gold and silver are saying, holy shit, I need out of the system now, out. And that was what it was like when these banks were being bailed out. When they're bailed in and people understand the systemic nature of one bank pulling down several others. We haven't even talked about the insurance companies in that environment, but or the brokerages, but and I think that will on the physical demand side, from retail side or from the investment side, I think that's enough demand to sway the tables dramatically. We're already seeing massive increase in green and renewable energy type of demand for silver. And let's not forget, we've depleted all of our artillery, lots of it, sending it off to the Ukraine. And as I've said many times before, Google it, almost exactly 500 ounces in the tip of every Tomahawk cruise missile. So when you're talking about, advanced weaponry and guidance systems, it all needs silver too. So between military and industrial and monetary demand, it's off the charts. Ultimately, when that happens, I think it really, you're going to see a squeeze on the COMEX and a squeeze on the LBMA, where everyone rushes to take what is available before it's not.
The Fed may be forced into QE. I mean, they may not get a chance to do that on their own. They may be forced into QE by financial conditions, by failures to deliver, by defaults on whether it be commercial real estate projects, banks themselves, insurance companies, brokers, what have you. I think it's very likely that the Fed will have their hand forced. I mean, look, let's go back to 1982 when rates peaked out. Every time the Fed lowered rates, they created a bubble. They started to raise rates until they broke something, and then they were forced to lower rates again. That cycle is still going, except this time rates are much higher than when they were at not much higher, but they are higher than where they were during the last hiking cycle.
In April 2023, BRICS announced plans to introduce a new reserve currency to boost intra-BRICS trade and eliminate dollar conversion costs in international transactions. Once consensus is achieved, BRICS plans to introduce a digital or an alternative currency. China is promoting the yuan as the alternative, with more than 17% of its reserves in the yuan. Russia would be amenable to this, but Brazil, India, and South Africa would like a different reserve currency for understandable reasons. The move towards de-dollarization is acquiring strength, but it is both challenging and quick, given the various economic and political challenges that lie ahead. Schectman and Holter see this as a pivotal moment in this evolving global economic landscape, possibly contributing to the ongoing diversification away from the US dollar. Schectman highlights that commercial banks are experiencing more substantial losses in dollar value than regional banks. Regional banks hold a significant portion of immediate liabilities on their balance sheets. While the current market conditions appear favorable regarding availability, premiums, and prices, Schectman cautioned against assuming everything is suddenly stable. He likened the situation to the calm before the storm, suggesting that underlying issues could resurface. Let's get back to the interview.
My guess is they will announce something, and my guess is that something will be some type of framework, and they may even give a timeline as to how quickly or slowly they plan to actually introduce a settlement currency. But it's already happening. I mean, look at Saudi Arabia. They're accepting other currencies than dollars. You've got China settling trade in yuan with no use of dollars whatsoever. So it doesn't matter whether August 22nd to the 24th is the day. It's already happening. There's nothing that's going to stop it, because there's no way, especially after the U.S. Confiscated the Russian Forex reserves, there's no way that trust is going to be rebuilt, and countries are going to say, no, we're not going that direction. We're going to stay with the dollar. The dollar is moving away from the system and to a point of extinction at some point. So, like I said, there's no turning back at this point. It's already in motion. The only question is the timing.
Yeah, even our allies like France buys massive liquid natural gas deal, I think, from Oman and pays for it in yuan. And I think it was Oman. I'm not positive. But it was one of the countries that's as big in exporting liquid natural gas and paid for it in yuan. All these trades used to settle in dollars. When you see Brazil, the second largest exporter of corn in the world, now accepting yuan for their trade. Little by little, all of these trades that used to be in dollars that are now settling in other currencies. And what is the yuan convertible into? Gold on the Shanghai Gold Exchange. And so, yeah, little by little, you're seeing, I think, the dollar being replaced. And so whether or not they make that announcement the 22nd, the big announcement to me will be the coalition of the Shanghai Cooperation Organization and the Eurasian Economic Union with the BRICS. They've all been formally invited to the BRICS. You have to wonder, when you look at the massive outflow out of the commercial banks, the big money, probably going directly into the treasury market, like treasurydirect.gov, where they can sidestep all the bank systemic risk, borrow direct or invest directly with the treasury in short-term duration treasuries. I mean, they're losing on a dollar basis way more than the regional banks are, which, they're the ones with all of the immediate balance sheet risk. So we're told. You look at what's going on with Bank of America, their stock is getting clubbed too. So there's a lot going on with the banks, and I think that's where the problem will reemerge from. And so this calm before the storm, honestly, is as in terms of availability and premium and price, it's never been this good. And you have to sit back and wonder, is everything all of a sudden okay, or is this just kind of the calm before the storm? I look at it as being the calm before the storm. I think the banks, before the end of this year and into next year, when over $1 trillion in these commercial real estate non-recourse loans have to reset or be refinanced, it's going to create a massive strain on the system, one that there's no way we're going to get away from unscathed.
Someone has to take the losses. That's the bottom line.
Looking ahead, the role of precious metals like gold and silver as safe haven investments during times of crisis seems likely to persist. The influence of financial issues on commodity prices could signal a turning point, with the possibility of sudden price spikes as the effectiveness of financial derivatives wanes. Considering these potential changes and challenges, what do you think the future holds for gold and silver prices? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.